Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we are talking about a credit rating upgrade on Tesla from Moody's. We also have a couple of updates on FSD Beta, an article on FSD from the Washington Post, some things out of China, and more. A lot of economic uncertainty continuing, but Tesla with a nice start to the week, up 1.75% today to close at $183.25, while the Nasdaq was up 0.4% on the day. Banking continues to dominate the news, still seeing how all of this is going to shake out, but we have an update on Credit Suisse. Over the weekend, UBS agreed to purchase Credit Suisse, so the second largest bank in Switzerland being acquired by the largest. Obviously, Credit Suisse has been in a bit of turmoil for quite some time now, with the recent developments sector-wide only exacerbating those issues. So again, the hope here would be that this helps with stability or even perceived stability, but we'll see. Quick look at the calendar. This will be a big week from a macro perspective. Of course, we have the FOMC meeting carrying out on Tuesday and Wednesday. Then the interest rate decision and rest of the FOMC statement will be issued 2 hours before market close on Wednesday, followed a half hour later by the press conference with Fed Chair Jerome Powell. An already heavily anticipated meeting, even more so now with the recent news. Obviously, the interest rate decision will be huge, but the associated commentary will be very interesting as well. So we'll follow that closely. Right now, going into the meeting, the CME Group FedWatch tool puts expectations at 25% or so for a pause in rate hikes and about a 75% chance for a 25 basis point increase. One other item to keep an eye out for this week, as we have talked about in the past, Ford is going to be splitting up their business units, and that changes how they report their financials. They're having a teach-in event for that separation on Thursday. That'll be at 10 a.m. Eastern Time. I'm not sure if that will include walking through how the businesses look historically with this new split. It may, and even if not, I think we're likely to get at least a little bit more information on how their EV business as its own business is coming along. I'm sure there's still going to be a few things in there obscuring things, but automakers in general have so far been very hesitant to share any financial information on their EV businesses. So if nothing else, it should be an improvement from today and help grow our understanding of the industry. All right, getting into Tesla news, we've got a big update from Moody's after market close today. They have upgraded Tesla's long-term issuer rating to Baa3 from Ba1 previously. This is a big move because this moves Tesla from a junk rating technically from Moody's to an investment grade rating, albeit still at the lowest level of investment grade. And they also have a stable outlook on Tesla as a company. So this has been a long time coming, many would say, and make a valid case that this is long overdue. Of course, back in October, S&P upgraded Tesla to an investment grade rating. As we had talked about at that time, there are some investors, some funds that are just not going to invest in companies that are not investment grade rated. It's just a filtering process. So presumably this should open up more potential buyers, more demand for Tesla stock, which is a good thing. Obviously, if we look back at the price action following the S&P investment grade rating increase, that didn't seem to provide too much of a benefit to the price action at that time, but as we know, there was a lot going on in Q4, Elon selling, China concerns, among other things, so we don't know what the price action would have been without that credit rating increase, but probably helps a little bit. And although I don't know to what extent this might be, I would have to imagine that there's a significant chunk of investors that if they are filtering in this way, would require investment grade ratings from both Moody's and S&P, as that would probably be seen as minimizing the risk of one of them being wrong. Now, can they both be wrong at the same time? Of course, happens all the time. Look at banking, what has just happened. Nevertheless, it's a box that people can check to feel like they manage their risk, and stuff like that is certainly not uncommon. So I don't want to overstate the impact of this. This isn't an S&P 500 inclusion level event, but it is still a nice milestone for Tesla. And I don't really expect Tesla to be raising much capital, but if they did want to, and if they did want to do that through debt, this would presumably help the rates that they could get on those offerings. Before we move on from this, I'll just highlight a couple of things that Moody's had to say in the note. They say the action reflects Moody's expectation that Tesla will remain one of the foremost manufacturers of battery EVs with an expanding global presence and very high profitability. And they say the upgrade also incorporates governance considerations, including Tesla's prudent financial policy and management's operational track record. As far as a possible upgrade on this rating, they say it could happen if Tesla maintains a strong global presence amid more competition, and they reduce the reliance on just the Model 3 and the Model Y. And they would also look for a longer track record on things like Tesla's EBITDA margin. And then they say it could be downgraded if demand for Tesla models materially softens, if EBITDA margins saw significant declines, or if Tesla's financial policy changed, basically if they became a lot more leveraged than they are today. So we'll move on from that, but congrats to Tesla for finally being investment grade rated from both S&P and Moody's. Only took like $20 billion in cash and no debt to get there. All right, next we've got a couple of updates on FSD Beta. Over the weekend, Tesla started to roll out FSD Beta 11.3.2 to a portion of the fleet. It is a broader expansion, not everybody with FSD Beta yet. Not unusual for Tesla to stagger releases like this. Usually once we get to this point, it doesn't take too much longer for a 100% rollout, of course, in North America. So exciting to see that begin, and hopefully we'll see that soon. As for the release notes, these are just basically the same release notes as 11.3.1 that we've already walked through. Tesla did add one bullet point, which says that they have adjusted the position of the automatic blind spot camera when FSD Beta is active to prioritize the autopilot visualization, and you can drag the camera to save custom positions, which I think you could already do on some of Tesla's software releases. The other thing that it looks like it includes, and I'm not sure if it actually has made its way to any of these vehicles yet, but Green the Only on Twitter is saying that this does provide park assist for vehicles that do not have ultrasonic sensors. So hopefully Tesla will keep expanding this version, it will go to some of those vehicles, and we'll get to hear from those customers on how well it's doing at replacing ultrasonic sensors with the cameras alone. And that should give us some pretty interesting insight into how well Tesla's occupancy network is working in some scenarios where maybe a little bit more precision is required. So some exciting stuff there on FSD. The other FSD topic for this weekend was an article published by the Washington Post. I got a few questions on this asking me to comment. I don't really think there's too much in here that we need to talk about, or rather that we haven't already talked about. It's kind of just recapping the trials and tribulations that FSD has gone through over the last couple of years. There's a big focus on Tesla removing radar. They try to paint the picture that this was an unsafe decision, highlighting the increase in complaints to NHTSA of phantom braking around the period where that was just removed. It should be fairly obvious to everyone that that is a very incomplete way of looking at the vehicle's safety. Maybe there were increases in phantom braking, but maybe the same changes that led to an increase in phantom braking led to a decrease in collisions with stationary objects, resulting in net fewer collisions. We don't know, we don't have the data, but Tesla does, so to look at one small part of it and to try to make a conclusion on overall safety off of that is flawed to say the least. They also cite anonymous Tesla employees questioning the strategy, questioning the pace of deployment, as if questioning strategy is not something that happens at most companies. But the Washington Post said about those employees that, quote, they said Musk's erratic leadership style also played a role, forcing them to work at a breakneck pace to develop the technology and to push it out to the public before it was ready. Some said they are worried that even today the software is not safe to be used on public roads. Most spoke on the condition of anonymity for fear of retribution, end quote. Obviously, Tesla has shared that there's been one FSD collision for every 3.2 million miles driven. It's about 6 times less than the national average, so seems plenty safe with human oversight. So perhaps we should consider the possibility that maybe some of the people with these opinions are just wrong, and even if it is or were a little bit less safe, there is a strong argument to be made that a little bit lower safety right now will yield learnings that ultimately improve the system's safety and then go on to save thousands and thousands of lives. We also obviously have no idea who these employees or former employees of Tesla are, how long they were with Tesla, how important their role was. The only former employee that they do name is John Bernal. He was an employee and he was sharing Tesla FSD Beta videos. That was back in February last year. I don't think that that was something that Tesla was allowing. He got fired and seemingly since then has taken every opportunity to talk poorly about FSD, usually presenting himself as an expert, but this is a person that worked at Tesla for less than 2 years, started on the auto labeling team, then was a test driver. And I don't want to diminish those positions, but generally they're not the positions that are going to be involved in setting the strategy for the overall autopilot team. So anyway, I don't think there's anything important in here that we haven't already discussed, but like I said, did get a few questions on it, so just wanted to at least briefly touch on that article. On the other hand, we did get a more positive article on Tesla's cost-cutting efforts from the Wall Street Journal, but similar story there. I think most of those items we've already talked about. Similarly, Adam Jonas of Morgan Stanley out with a new note on Tesla today. Overweight rating, $220 price target, no changes there. They're just talking about why they believe Tesla's price cuts are rational and that they believe EV price cuts are not a fad but a trend. While subject to volatility, investors should anticipate further price cuts in EVs, with cost leader Tesla setting the tone. I would definitely agree with that. I think Tesla's kind of made that clear since the original master plan. Next up, we've got something from last week that we haven't had an opportunity to talk about yet. Tesla app updates on Twitter, noticing that Tesla has added the capability in the app to only charge your vehicle in the case of excess solar being generated from your solar panels. It isn't yet live in the app, and I think it may require Powerwall integration as well, but that's a really nice optimization option for those periods of times where your solar system is just generating way more energy than you can use during certain periods of time. Obviously, the Powerwall can help with that, but if the Powerwall is full, this now gives another option to still harness that energy without maybe having to put that back into the grid at possibly an unfavorable rate. So it should be a welcome addition when that option does come live. Next, we've got a quick marketing update from Tesla in Europe. They've announced that their first remote test drive hub has opened in Sweden. Tesla says that prospective customers can book an appointment at tesla.com, call us when they have arrived. Tesla will remotely unlock the vehicle, walking them through the basics. They can take a test drive for 30 minutes and then drop the vehicle back at the same location. So we've seen these sort of hands-off efforts from Tesla for test drives periodically, I would say, since COVID started. So this seems to be a purpose-built facility, sort of taking the next iteration in that process. This should be a very cost-effective method for handling test drives. Next, we've got an EV credit update just for the state of Oregon. They've announced that they are halting the EV credit program in May just because of too much demand for the credits. Generally, that's a $2,500 credit in the state, but because of the high amount of EV sales, they have already worked through their budget for this year, so putting it on pause, I believe, until 2024. Still, that buys them a lot of time. I would be surprised if they didn't work through a more structural change, as I would also assume that they would anticipate the growth continuing. All right, next we've got some rumors coming out of China on BYD. This is just from Weibo, being shared by Charles Boy on Twitter. This is coming from a post on Weibo again that looks like the account has 169,000 followers. And they're saying, according to online rumors, some of BYD's production lines have started to take a 3-day break as of Thursday. They go on to say that this is purported to be because BYD's orders are not keeping pace with production, so some production downtime to compensate. Obviously, take it for what it's worth, but just based on how we have been seeing those insured vehicle numbers come in, this wouldn't be too surprising to me, but something to watch just to see if there are other reports of this. And possibly worth mentioning that in this post from Weibo, later on there is probably some biased language that it talks about how BYD investors are crazy, and some of them think that BYD is going to be the only car company left. That seems to be just their personal opinion layered on top of what they have heard separately, but probably still worth noting. Another quick update on China. Xpeng has reported their fourth quarter earnings. They did lose $342 million, a little bit more than expected, and they also said that the first quarter could see deliveries down as much as 48% from last year. So again, a lot of signs on how tough the market is in China right now. All right, last couple of things here. First, an update on Toyota. Of course, they have a new incoming CEO. Automotive News with a report today on some of his plans. They are reporting that the new CEO says that hydrogen will be a top priority of his carbon neutral strategy. What exactly that strategy is a little bit unclear. Automotive News says that Toyota does not even have a concrete sales target on their hydrogen vehicles, and that Toyota's incoming CEO declined to offer a target and said that, quote, "We don't have a very specific business goal at this time," end quote. Maybe taking a page out of Elon's book there, the best part is no part, then the best plan is no plan. I don't know if that transfers over. But Toyota seems to be giving it a shot, with the CEO saying that it's especially crucial to bring more partners to the table to build out a network of companies manufacturing, delivering, and using hydrogen, because, quote, "We need a production and transport supply chain. Unless we see evolution there, we cannot expect a volume increase in the energy's use," and, quote, "It's not that Toyota will make a proactive lead in making these investments," end quote. So it's a top priority, a huge part of their plans. How big? Well, they don't really know. And the infrastructure is crucial to growing volume, but they're not going to build the infrastructure. So it sounds like another top strategy here for Toyota. I had to kind of chuckle too at the other Automotive News headline that was on the site today. It says, "Fuel cells left behind by rapid EV sales, infrastructure growth." All right, lastly then, just a quick SpaceX update. Last week we had talked about how Starship was getting very close to an orbital test flight. Right after we talked about that, Elon tweeted that SpaceX will be ready to launch Starship in a few weeks, then launch timing depending on FAA license approval. So if that takes a few weeks, Elon's speculating that maybe that could happen on April 20th. All right, that is where we'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Tuesday, March 21st episode of Tesla Daily. Thank you.